everyone for signing up. This is where so many people stay up to date with the latest on the real estate market, the latest numbers for Houston, for Dallas, for San Antonio, for Austin. Then we look at the state of Texas and how that even compares to some national numbers. And we do it with our industry experts. We do it with founder and CEO of Catalyst Funding. I want to introduce Wade Comeaux.
Hey, everybody.
And we have our director of lending with Catalyst Funding, Jeff Johnson.
Howdy.
And today we're excited to have special guests with us from Prosperity Real Estate Group, the CEO, AC Ramos.
Hey, guys.
Welcome aboard, AC.
And I'm going to turn it over to Wade to give the introduction here for AC.
Yeah, I'm going to talk a little bit about AC and then give him a chance to talk about some exciting things going on with him. But we have known AC and collaborated with him on multiple different things over the years. And he has one of the best industry mixers in the game. So if you have not been to his event, you definitely want to check that out. I'll let him talk about that a little bit. But he's also a real estate investor himself. He coaches, he consults, he mentors. They do a really good job on acquiring properties. And if you're an investor looking to get deals, he's definitely someone you want to link up with. But always just had a great reputation in the industry, somebody you can trust. He builds relationships and he does really everything possible to maintain relationships. That's the thing I've always appreciated about AC. But AC, tell us about your event and some other exciting things going on.
Awesome. Thank you, guys. I really appreciate that. And I really appreciate y'all always being a part of a lot of stuff that we do, like you said. Yeah, man, we have a networking mixer that happens every single month. We are the second Thursday of the month every month at McIntyre's in the Heights. We've been there for about 2 years now. We've talked about moving venues, but I really like that venue. It's central. The parking's sometimes a little tough, but because we pack it out, but it's a good place. It's a fun atmosphere, and I think it's just we don't do it's not a pitch fest, right? We're not there pitching a bunch of stuff. We bring vendors like yourself out to these kind of events and just try to bring people together and try to supply a need and for the voids out there, right? Because there's a lot of investors that want to get started, and of course a lot of them we coach and mentor, but a lot of them they don't get out, they don't get to meet lenders, appraisers, insurance companies. So we try to bring that all together and let everybody have a good time while doing it. So yeah, if you're interested, check out prosperitygroup.com and you can find out more about our networking event there.
Yeah, it's a great venue. I mean, I go there even if it's not AC's event, and you can't say that about every networking event. It's a place that's cool enough to go, even if you're not going for networking. But even beyond that, there are a lot of major players there, some new people. So there's a wide variety of people that you can meet with to exchange ideas, learn from, and build a really strong network, build out your team. People always talk about that, coaches, mentors. You got to build out your team so you can build out your team with lenders, wholesalers that can bring you deals, insurance companies. They have a really wide gamut of strong people to build out your team.
Yeah, I've been a lot, and I've been to a lot of events, and some of them are kind of stiff. It's just a lot of listening, but AC's event is a good time. You learn a lot, you meet a lot of investors, whether you're wholesaling or flipping, doing buy and hold, or anything in between. Like, there's a lot of good people at the event, and it's a good time. So I highly recommend for those of you who have not been to go check it out for sure. AC, talk a little bit about your group, like your company, what y'all do, anything coming down the pipe in your world. Let people know that don't know who you are, like kind of what your organization's all about.
Okay, awesome, thank you. Yeah, again, so my name is AC Ramos. I'm with Prosperity Real Estate Group. That is our coaching, education, mentorship side of the business, and we've actually had over 10,000 students now. We've been in business since 2012 on that side of the business, and we've created multiple millionaires in the Houston area before the pandemic. And since pandemic, we've actually gone nationwide. So I have students in Canada, Mexico, New Mexico, Arizona, Florida, like all over the country. So it was that pivot really changed things for us. But we have a lot of students doing deals, and it also opened up for us to do deals in other markets. But yeah, so we have a lot of students that are doing deals, and we've had a lot of success with showing people. We really I like to say we show you how to build out your infrastructure of a business. If you're looking for somebody to show you how to do an extra deal a year or something, I'm probably not the guy. Because I'm going to break it down. If you're in my mastermind group, I break it down and show you how to build a marketing infrastructure, an acquisition infrastructure, and a sales and disposition infrastructure. And that's how we're able to, I mean, we've been in business. I've actually been doing real estate since 1999. So I feel really old. And and been doing wholesaling since 2004. I actually got started with rehabbing. I didn't even know about wholesaling or hard money, private money, anything like that. Like I strictly was partnered with a family member, my aunt, who's more like my mother, and we started rehabbing houses in 1999, buying them, fixing them, selling them. So I think that actually helped me with understanding repairs and stuff like that when I got to the wholesaling side of things. And then the rehabbing, wholesaling, buy and hold, I purchased about 45 doors of apartments in the past year and a half. We have like 16 houses, single family rental houses. So being actually in the business, where I'm sure y'all know there's a lot of people out there that teach the business that aren't actually in the business or doing the business. It allows me to keep my finger on the pulse, because when things change, I have to be up on that, which affects the way that I'm able to lead my mentorship group and our group. So that's kind of what we got going on. And we actually have a lot of students that are doing very, very well right now with this market that we have. You know what I mean? Like I'm very big on wholesaling right now. Like we've been buying and holding for the past couple of years and a little bit of everything, but I really see this being a great time for wholesaling.
Absolutely. All right. Well, AC, thanks for the info in your business, and we'll give AC's contact information at the end of the presentation. So be sure to stick around for that. And we ready to dive in, Derek?
We are, absolutely. I'll give the disclaimer. AC said it best that today, when you're watching this market update webinar, it's important that you have real estate lending, like Catalyst is, built by real estate investors. And that's the value you have today, is that you're going to get industry trends, news, information from these three industry experts. But here's the disclaimer for that. As these presentations happen, Catalyst Funding and our guest speakers or representatives are not held liable for any decisions you make based on the information you hear today. So with that being said, I'll turn it over to our team and enjoy the webinar.
Absolutely. We've already introduced AC, so we can go to the next page. Most people know Jeff and I, so I'm going to skip that. I'll talk very briefly about our value proposition. As Derek mentioned, we try to be a one-stop shop for all your real estate investment needs in the single family 1 to 4 and the smaller multifamily space. That's really our sweet spot. We really focus in that area and provide a lot of innovative products. We have some products that no one else in the country that I'm aware of has, especially with some appraisal integrations that we have between hard money and long-term loans. And that's also our secret sauce, that we really focus on the buy and hold investor. We do lend to flippers, and we're very good at that, but we provide a lot of integration and innovation in the buy and hold space, both with conventional loans and with non-qualified mortgages. We have 5-star customer service reviews on all the social media platforms, including Google and Facebook, etc. And then we really try to cover a couple different categories. That non-QM space, which means no income docs required. It's a very good space if you're a full-time real estate investor, if you're a wholesaler wanting to get into holding properties long-term. These are excellent products, and the cool thing about them is they're often very superior to what you could get from a bank with a much more difficult process and inferior loan products. These are 30-year fixed for people that do not provide income docs. So very exciting category, because I know a lot of people that work with AC are in that wholesaler space. And if you want to start to mix in some wealth building instead of just immediate cash from the wholesaling, this is a great way in which to do it.
Definitely.
All right, so let's dive in. Jeff, why don't you handle this first slide for us, the Houston summary?
Yep. I was just to hit back on that previous topic real quick. I know we talk a lot about DSCR loans, or at least I do, but it is amazing. I run into investors all the time that still did not understand what they were or know they were out there. So, for you new folks, If you are self-employed, or maybe your taxes, you write off a lot of stuff and you just don't show that much income, but you have cash and you want to be an investor, and maybe you thought you couldn't, reach out to us or any lender, but hopefully it's us, and just ask about DSCR loans, because it's a great way for you to build long-term wealth, buy rental properties, and the rates and terms for DSCR loans are very similar right now to what they would be for conventional loans. Actually, the LTVs that we just got to update on our guidelines, the LTVs are, in some instances, can be greater for those deals. So if you want to be an investor, don't let your job situation or your tax return situation stop you from buying rental properties. So,
Jeff, real quick, just to emphasize that, correct me if I'm wrong, I believe we're able to do 80% on refis, right?
Rate terms are at 80% now.
That's really good. And the pricing is, to Jeff's point, very, very attractive. So if you're out there thinking about, you're assigning deals to other people, you're buying them at 70, maybe 75, we can finance up to 80. So on a lot of these deals, you might be out of pocket very little, maybe even no money on a buy and hold. If you are a wholesaler who's getting deals deep, it could be a really good opportunity to build some wealth. All right.
Yeah, I mean, if you're a well-qualified individual and the deal is right, we can lend up to 75%. And then on the refi, if you qualify for 80, think about it. That's another 5% for closing costs and whatnot. So, and we see a lot of deals. You could, in theory, get into these deals for basically nothing out of pocket, except for your payments, obviously. But the LTVs right now are very attractive, especially given the deals we're seeing come across our desk. All right. So Houston, I will cover June. The total dollar volume is NAC. I know it's been a minute since we've been on here, but we like to look at last year, obviously, but then you also compare it to pre-COVID, because COVID had brought some really aggressive numbers, and people kind of lose perspective on what's a normal real estate market. So if you're comparing it to just last year and being kind of short-sighted about it, then you may see a lot of doom and gloom. But if you look at it compared to 4 years ago, pre-COVID, basically, what our normal real estate market was, nobody was crying about the 2019 market, right? It was what it was. So when you compare those two, you can really see the difference in what's been going on. So active listings, there are 36,000. So there are more listings than there were a year ago, but less than the pre-COVID number, right? Some of the highlights, the average price. So look at the difference. Even with some of the stuff you hear in the news, the average sales price in Houston is effectively the same, 433 to 431. I mean, that's basically a flat market. You look at the sales price from 4 years ago, 321 to 431. So if you bought a property 4 years ago, did nothing, your equity position went up over $100,000 by just holding on to that property. That's pretty powerful. Median, so the median's a little bit down, not much, 354 to 345, 2%. But when you compare it, like I said, to pre-COVID, 250 to 345, it's over 35%. Months of inventory, 3.1, so it's a little bit more inventory, like we've been talking about, less than pre-COVID. Typically, people like to say that a 6 month of inventory is about right. So if you're under 6, it's still very attractive. Pending sales, roughly the same. And then days on market, 45 days on market. So it's still fewer days than pre-COVID, a little bit more than the hotness of COVID, but still very attractive numbers. And I don't really see any reason on this chart where somebody wouldn't still be an aggressive investor at this point.
And I think in Houston, we got a little spoiled. We're spoiled in general because I'm a little biased, but I think we are better than New York and California. And that's just, I'm born and raised Houston. But, COVID was an anomaly. COVID you're right. It was completely different and it was unexpected. And 2019 was not bad, and I think a lot of people were expecting COVID to have a negative effect And I think what happened was people around the country got to see, man, Houston. I think our true value came out in COVID, because New York and California, people would come down here, they get off the plane and see that we're not all wearing cowboy boots and riding. And they were like, wow, this is actually pretty cool. They got good food, they got good businesses, they got an economy that's thriving, and they're not riding horses. And now we all carry guns most of the time, but besides the horses and the cowboy hats, though, and the boots. But so from last year, we, there's a lot of, like you said, doom and gloom and scarcity mentality. But when you really look at it, we are doing so great now. And our value was brought up and maintained, because I don't think like something like Austin or in other parts of the country where the prices and values did decline, I think we were undervalued before that. And we just started to catch up to our value. Like, I think we were way underestimated compared to New York and California. And I believe that helped us to sustain,
Yeah, no doubt. You look at the amenities in Houston, Dallas, definitely top 5, 6 amenities in the country, but the price point that we'll show at the end of the presentation, the affordability index, the amenities you get for the price paid are still stellar. And that's why me and AC and Jeff and a lot of other people out there believe that Houston is not and probably will not really decrease in value over time. Now, it's not going to go up like it did during COVID. It's not going to go up 15% a year. Nobody sees that with where rates are. But the thing I want to really emphasize here is that in the absence of an oversupply, you're not going to see big drops in prices. So whenever you look at the supply that we have, obviously it's a little bit higher than it was in COVID, but it's way below a normalized market. June 2019 was a good solid market. There were 45,000 homes in the market. We still only have 36, right? And why is that? Despite rates are higher, it's because the people that have that 3% are unwilling to give it up and go into a 7%. It's just not going to happen very often. So the people that are going to sell their properties are probably have some major reason to do it, because they're not just going to up level anymore, right? They're going to have some major, they're moving out of the area for a job. They're in distress. They might sell to someone like AC to get out of their distress situation. But in the absence of a lot more supply, which I just don't really see happening unless something drastically changes in the market, where I think we're going to see this steadiness. No big jumps, no big increases, but no big drops either, right?
I see, yeah, like, affordability, obviously interest rates are higher, and so that affects things. But I look at the two numbers. If you look at in 2019, you look at the single family home sales, 9,500 versus 45,000 listings, right? Nobody said anything about that. That was just the way it was. Look at now, more sales with less listings. So properties are still coming off the market. Like, they're still doing deals, with rates where they are. You would and maybe some negativity you might hear, but you would expect that those numbers to be way lower with regards to sales versus listings. But properties are still selling all day long, so there's still a very robust demand for these properties.
For sure. Let's go to this next slide. I'm sorry, AC, I'll get some of your comments on it. I'm kind of excited about it. Derek did a great job of finding this next slide. And this is from a group, Real Wealth. I actually hear them on Bigger Pockets sometimes. If you ever listen to the podcast, I actually heard her, I think it's Rich Fakey's wife, presenting the other day on a podcast. It was really good. But at the end of the day, what this is it's some new information we haven't covered before, but it's basically ranking what this group feels are the top 10 markets in which to invest in the country. And I might disagree with the stack rankings a little bit, but San Antonio's number 1, Dallas number 6, Houston number 10. But if you look at some of these statistics, it really compares to the national average. I think it shines a light on some things that we might not otherwise really see. So the average home price is 12.8% below the national average. And whenever you think about it, you're in one of the top 5 largest cities, most amenities in the country, and we're that far below the national average. It's really stunning if you think about it, that you can get a below average price home at all with the amenities and the great things going on that we have here. The average monthly rent also below. So tenants are in at a lower price point, and that means that we have upside, not only in value, but we have upside in rents, because we're still charging less than a lot of the rest of the country, right? And we have strong income in Houston. It may not be what it is in San Francisco or something like that at the moment. That may still be pulling down, but at the I do think that whenever you look at that affordability index, it also bleeds into rents. 8-year equity growth, we are below average there. So there's still more opportunity on upside. Whenever you look at that population growth, this is a shocker, right? Look at this, 191% above. That tells you people move where their situation is better. People move where there's opportunity. People move where they see value in their life and their real estate and other things like that. So that is an outstanding number. And then 1-year job growth, 63% above. So those are two amazing statistics that I think are super exciting. And I will say, I saw something the other day in post-COVID job growth. Florida was number 1, Texas was number 2 in a statistic I saw the other day. So Texas really bouncing back from that COVID era very, very strongly with job growth overall. So, and to reiterate again, the ranking in this particular report was 10 for Houston. So with this information you see here, are there any things that really jump out at UAC?
It kind of goes along with what I was saying is like our we have jobs. I think that equity growth, the 8-year equity growth being below average, I think that's because we really weren't recognized, and everybody, because look how low we were on our equity growth before COVID. Like COVID pushed it, and then it kind of plateaued. And I think we will continue to grow there. I don't know how fast, but I think we were so undervalued. That's why the 8-year equity growth is below average. Our jobs, obviously great. I think that's why the COVID pushed us so well, and that's why our population growth is outstanding. And it's just going to be a lot more traffic. That's what I see.
Yeah, those we're going to hit San Antonio and Dallas as well, but those bottom 2 numbers, in my opinion, the population growth and the job growth, like every city in Houston, Texas, its population is just growing massively, and the jobs as well. Like there's that. I think that is what's fueling this just great economy we're in right now. Is there's so many people coming to Houston. I think we're the most diverse city in the world, maybe, definitely in the country. I mean, there's so many people coming to Texas, and it's fueling our economy. It's great.
We're pretty much our own country.
A lot of people
Pretty much.
All right.
All right, let's check out this next slide. It has a lot of the same data, but there's a couple things to point out. I do want to point out the 1-year equity growth, 16%. I did see on the Dallas slide, they focus on the 1-year equity growth, and it's 122%. I'm sorry, 46% above the average, national average, 46%, whereas Houston is only 16% above the national average. But the job growth over that time frame, look at that, 193,600 jobs created over the last year. That's a really shocking number. But when you were talking about that AC, that the overall home growth, equity growth has not been on par with the rest of the country. If you think about it, if you're looking to buy today, that's probably something that you want because there's still a lot of upside, right? The thing you wouldn't want to see is that you've kind of eaten up all of that upside potential. So I think that's a strong number.
Yeah, I think that goes back to us being spoiled in Houston. Because I talk to people and they're like, oh man, the prices went up, my taxes went up. I'm like, well, good thing you don't live in New York or California. Because I do believe we are undervalued and we do have that room to grow.
Right. Let's go to the next slide. A couple things here so this is a summary of the reasons why this group feels that Houston is a great place to invest in. We did cover the job growth and how big that is above the national average. That's a really important thing. The average appreciation for the last 8 years has been 8.24. We kind of talk historically. Some people say 5.5, some people say 6.5 historically, depending on the time frame in which you look at. But at 8.25 is really, really strong. And then the other number that they emphasize again, of course, is Houston is the 5th fastest growing metro in the U.S. with an 11-year population growth that's 190% above the average. Now, it depends on the time frame you pick. I've seen several others that say Dallas and Houston. We had actually the monthly market update last month, I think said Dallas and Houston were number 1 and number 2, but that might have been a year over year type thing for the major metros. But there is no analysis of population growth that is not outstanding compared to its peer group. So that's for sure.
Yeah, the one thing I wanted to, like, the actionable thing that I wanted to just say real quick about this slide, where it says the real estate 8% per year. So we talk to clients all the time about using the equity, or some people call it dead equity, in their properties to pull cash out to go buy more houses. You know, like you're saying, AC, it's a great time right now to be buying deals. We assume a 4% appreciation. So if you've been getting 8 over the last 8 years or so, so many people have equity in their properties. If you don't think you have the cash to be a real estate investor, a lot of times, you know, and some people get nervous about not pulling out, you know, hey, I got 3 or 4%. If you were to take that equity that you've gained over the last 10 years or so and deploy that into more properties, over the next 5 to 10 years, the numbers are stupid. How much better off you're going to be if you take that money now, deploy it, buy some properties with it. Yeah, your rate's a little higher on your primary mortgage, but over the long run, your cash flow and your equity appreciation and your just net worth in general is so much higher by utilizing that equity you have in your property. So if you're sitting on a property and you have a great rate and you think, I would never, it's stupid to touch it, but you're hesitant because you maybe don't have the cash to get into the game and start really buying a lot of properties, talk to somebody about doing a cash out, getting that money and deploying it into these properties that we're seeing, that AC is seeing, because I promise you, in the long run, 10 years down the road, it will be, you'll laugh at how hesitant you were to do it versus how much more wealthy you are today or 10 years from now.
Oh yeah. Yeah. No, you know, I don't think people really understand that. You know, like, I'm big on wholesaling. People think, oh, you're just a wholesaler, this and that. But I buy and hold. I do flips. Wholesaling is like my active income. That's like that's my job, right? Flips is like bigger chunks of money. But buy and hold, when you buy something and hold it for the appreciation and the depreciation values that it has with it also, that is where wealth is built. And that's what I tell my students all the time is, like, wholesaling should be your job, where you can make, you know, I have a student that makes $1 million a year wholesaling. You know what I mean? You know, I mean, I have another student that makes over $3 million a year in real estate, but they buy and hold is where they build their wealth. That's where you make crazy numbers. And if you have that opportunity, like Jeff was saying, if you have equity in your house, don't just let it sit there and go to waste. Like, use that and don't go buy a liability. Use it to go buy an asset that's going to grow, and you leverage that into more wealth building, right? So I think that's a great point, Jeff.
Yep. Great thing about buy and hold is you're not only as good as your next assignment fee. You know, the assignment fees are great. To your point, we did that for a long time, but it is the immediate income. The way you get to a point where you don't have to depend on that every month is through buying and holding property and building that mailbox money, for sure.
Next
Let's
slide.
talk a little bit about Dallas.
I'll cover this one if you want to hit the highlights. So just raw stats. Dallas is a juggernaut, let me tell you. Total active listings, 18,000 versus 15,000 last year. Sales, 8,700, 9,100 a year ago. But look at the price.
Amazing.
It's still way up relative to last year and 4 years ago. I mean, 430 to 520, 337 if you bought 4 years ago. That's almost 200 grand. Like, what is that, 180, 185? Median sales price, the median is down slightly. So that tells me there's a lot of maybe some high-end stuff going on in Dallas to bring those prices up. But still, compare that to 2019, 277 to 415. That's well over 100 grand that that's a 50% return pre-COVID. Months of inventory, still way down, 2.5. What was Houston? Houston was 3.1. So they're moving faster still in Dallas. 7,800 pending sales and 41 days on market as compared to 45 4 years ago. Houston's at 45 days on market. So it's basically It's very resilient, Dallas. Like, and I think we talk about jobs and people moving into Houston. It's even more so in Dallas, I believe. Like that place is just blowing and going when it comes to jobs and people moving into Dallas.
Yeah, to see Austin, and we'll see Austin in a moment, but I know in the past they were down 15%. Now they're only down 10% year over year, but to see Dallas in this rate environment being up 21% year over year, that is an amazing statistic.
Yeah, those are some crazy numbers right there.
Yeah, very strong. And the days on market, that's comparable to where Houston is. If I'm being honest, I don't think that days on market is drastically different. The inventory is not drastically different. It's just the price increase is really, really stunning. So it's interesting. A lot of people that I think are very smart really focus on Dallas, even though it is not the best cash flowing market because of these numbers. Like they are just incredibly resilient. Home prices are appreciating. And what a lot of people are going into these markets a little bit further outside, because there's fantastic job opportunities in that Plano, McKinney area. And you can go further north and really have some amazing opportunities. You just have to be a little bit more willing to go outside of the center part of Dallas in order to get fantastic deals.
Yep. Next slide.
Yeah, so here we've got, the average home price is 10% above the national average, so not as affordable as Houston. That is something to keep in mind. It's definitely not as affordable. The average monthly rent, 10% below. Now that's an interesting statistic, right? So I think there's a lot of upside ability on rents. Whenever you're 10% above for the price, 10% below for rents, that would give me an indication that there's a lot of upside for rents there in Dallas. I think that'll eventually start to take hold because people are more willing to pay up on the rents whenever they make that purchase or rent decision, right? There's normally a little bit less of a gap there in comparable markets. The 1 year equity growth, 46% above the national average. That's a big number. Population growth, 193%. I think that's right on par with Houston from what I remember, but the job growth is even way above Houston, 7.1%, with 87% above the national average. And in that ranking I mentioned earlier, whereas Houston was 10, Dallas was ranked 6th nationally, according to these pundits. Now that's somewhat subjective. They kind of throw everything into a formula, but still, for all the places in the country, it's 6. And it's interesting because it's not going to have the cash flow or the return on investment that you get in some other cities, but I think it's because of the high probability of continued appreciation that puts it up.
I think that, and then I think, like you said, the combination of the population and the job growth, like that job growth is really high, higher than Houston's, which we thought was pretty high as well. So I think if people are moving in and you got a lot of jobs, those are two very strong indicators of a good market.
I find it interesting. They did the 1 year equity growth on here, but on the other one, they did an 8 year equity growth on Houston, right?
Yeah, I noticed that. I think, I'm guessing they just wanted to kind of highlight how absurd it is, because that's a big number relative to the national average.
They're just trying to brag.
Yeah, Dallas always trying to. There's always a friendly, or maybe not so friendly, competition between Houston and Dallas,
right.
which was won by the Astros the other day. I will say.
Nice. That was a rough night last night.
Not last night, yes, but before. It was a good series. Anyway, the one thing I will say is that I looked at this report in depth, and they covered a lot of cities, and they did just pick things that they felt. They didn't show the exact same data for everybody because they have more than just these 5 data sets, right? They have a lot more factors going in. They just picked the most impactful ones. If you go to the next slide, this is all the data that they included. And so they will pull some of these things, like 1 year equity growth, 8 year equity growth, and they just threw the best ones on there.
See, here on this one, it says the median household income is 75 and Houston was around 70, but on the slide, it said 65 for Dallas and said 54 or something like that for Houston. That was kind of interesting.
Yeah, you're right. That's a good point. I did notice that Houston says 54 household income. I'm not sure why they have different numbers there.
It said 70.
Yeah, no, you're right.
Ernie?
I
I'm
don't
not
know.
sure. We did pull that straight off the, and normally it's a very reputable. I mean, I consider their stats to normally be pretty good. I'm not sure why that is. On the next slide, we had the summary of the reasons they think it's really good to move there. New jobs, 276,000. Past 8 years, average home price up 12% on average. Houston was what, 8.4? Dallas 12.1. Well, that's a really big number for 8 years. Really big.
Yes.
Yeah, Houston was 8.
All right, San Antonio. Let's dive into San Antonio, which was ranked number 1 by this group, number 1 in the country for real estate investment opportunity. So remembering some of the other stats, you can see, the one thing that's interesting is the days on market. The other 2 cities were not, Dallas and Houston were not higher. The days on market now in San Antonio are higher than it was pre-COVID, and by 11 days. So that's an interesting trend to keep an eye on, is that there does seem to be more inventory there. Also, total active listings are above June of 2019. Also not the same case in Dallas or in Houston. That's an interesting statistic. The average and median sales price are down, definitely much more than Dallas, a little bit more than Houston. So I think what we're seeing here is that the home prices are coming down a little bit more. The inventory, so not quite as a robust a sell market, but the statistics that we'll look at in a moment, rating it as a city to invest in rental properties, it is perceived by this group to be the best. So let's hop over to that slide and see some of the reasons for that.
And that's kind of interesting because San Antonio is one of the markets that we're expanding into now here in Houston, here in Texas, because we're doing Florida, North Carolina, South Carolina, but in Houston, in Texas, I mean, San Antonio has been on our radar for a while because it is a little more affordable than, a lot more affordable than Dallas, but more affordable than Houston, and it's very like a blue collar working class area,
Sure. So how have you experienced the competition for you buying off market deals? How does it compare to Houston, out of curiosity?
We haven't started over there. We just started pulling all our data, building our list, and getting our team ready that's going to be working the San Antonio market.
Gotcha. Okay. Well, maybe by the next time you're on the monthly market update, you can tell us how San Antonio compares to Houston. Yeah. So on this slide here, there's some interesting stats below the national average, not unlike what we said about Houston being below, Dallas above. Look how much below the average rent though. This is a shocking number to me. I think it tells a story of a lot of upside. 1473, 25% below the national average. And while it does not have the amenities that a Houston or Dallas does, or in some ways even Austin, it's still got a tremendous amount of amenities to be 25% below the national average on rents. Wow, if you're a person who's just starting off and looking for a place to work, but you're not ready to buy a home, that seems like a very attractive market if you think about it. 8-year equity growth, 5.88% above. Population growth, I think this number is actually slightly stronger than Dallas or Houston. No, Dallas is maybe 193. And 1-year job growth, 17% above. So really strong numbers there across the board. I'm assuming one of the reasons that the prognosticators think it's the number 1 place to be is that top right number, 1473 on rents, and how much upside there is to go from there.
I think if you look at the population growth, I mean, there's still plenty of jobs. The population is booming, and the prices of the real estate is cheap. So I'm relatively speaking. So to your point, I think what they're projecting is that rent is going to catch up with those low prices and all the people moving in. I mean, you think it has to, and that's why they think there's a good time to get in now.
Yeah, I think
suffer a little bit of low cash flow now because in the long run, it should project nicely upwards relative to other places you can invest.
Exactly. That's kind of what I was going to say right now. Is it like in Houston, you look, there's some areas like I say, if you're going to go, when people are looking for rentals and stuff like that, and a lot of people that are in my coaching program, and they have good jobs and they live in Cypress or Katy or the Woodlands, they're like, well, I want to buy rental properties around me. And I'm like, that's great. if you can find a really good wholesale price. But in Houston, like there's more upside in the lower end working class areas, right? Like I bought houses in Sunnyside that I still own, and I bought them for $28,000, put $30,000 into fixing them, and they were worth 80, and now they're worth 220. You know what I mean? But that I had them. The growth up when you start lower, you have more room for growth, and I think San Antonio is an example of that statewide. Is like that's like the sunny side of Texas. You know?
Don't tell them that.
Yeah, don't do that. But Sunnyside is actually, if you've driven over there, the streets are new. They redid the infrastructure, which they rehabbed the infrastructure while people were rehabbing the houses. And that side of town has it's not completely changed and transitioned, but it's a lot different than what it was 15 years ago, 10 years ago when I started buying properties over there. And I think that's kind of the thing with San Antonio is when you start at a lower point, you have more upside. And that's I think that's why San Antonio is a great investment area.
I heard a new term for that area, like Museum District East or something like that the other, like rebranding it a little bit. I don't know if you guys have heard.
What, Sunnyside?
Yeah, I have heard.
Museum District, maybe West, or I don't know, maybe Museum District East. I like that.
I can't remember exactly what it was. But
well, you know that so a lot of people that, so you got the doctors that live, you know, in Third Ward, and they rehab these big houses, and they have stuff there. And then the nurses, the aides, everything like that work at the hospitals, they can't afford that, and they've been buying in that Sunnyside area, and that's been bringing it up off that 288 section over there.
A lot of new construction in there. A lot of new construction.
Yeah.
Med Center South. Med Center South.
That may be one. I can't remember. It was something like that.
That's what it was. Med Center South. Yes.
Yeah, that makes more sense. That makes sense. Yeah, I haven't seen too many museums over there in Sunnyside, but
that's what it. So let's go over the summaries as to why they think it's top 3 reasons to invest in San Antonio. Population growth, 20% year over year. Wow, man, is that right? That is astonishing. I don't know if we saw that on the previous.
That was 11 years.
Okay, 11, 20. Okay, I was going to say,
yes.
Jesus, that's crazy.
Yeah.
All right, that makes more sense.
11 years.
I was like, I can't believe that. Strong job growth. I'm going to get that out eventually. You look at that, the GDP of this area is over 132 billion, has grown by more than 58% since 2010. That is a very impressive number as well, right? Also talking about job growth, a job growth rate of 4.52%. Appreciation 89% over the last 8 years, so a little over 10%. That's stronger than Houston, not quite where Dallas is, obviously. Annual rate of 9.52%. Yep. With a good rate of appreciation, it's no wonder that people are looking to buy there. And then the home sales are anticipated to raise by 2.5%, with average price increases of 4.6% for San Antonio. So some of the reasons that they really feel it's the top area in the country.
Yeah, that previous slide said 66% annual household income like that. I mean, I'm surprised they're as close to Dallas and Houston, and that's another reason why it's a great place for growth, is because they have the income to grow. You know, they have the income.
Yeah.
They need to
support. Yeah, so Dallas is 76, Houston was 71, and then like you said, San Antonio is 67. So
yeah, that's pretty close though. You know,
yeah.
I would expect it to be. I would have thought, if you wouldn't have showed me that, I would have thought it would be lower than that.
Yeah, definitely a lot more room to pay higher rents, right?
Yes.
A lot more room to pay higher rents. All right, Austin.
So I'll cover this one real quick. Austin, total listings 9,600, excuse me, as opposed to last year 7,000. Pre-COVID 7,100, so there's more houses for sale. Sales, again, so if you remember, I think it was Dallas, the sales versus listing number, it was significantly higher now, even pre pre-COVID. These are a little slower, like you said. So 2019, you have 3,300 sales versus 7,100 listings. Now 3,100 sales versus 9,600 listings. Prices are still up. Pre-COVID prices are still significantly up, $150,000 in equity, 44%. Those are numbers that are strong. There is a year over year significant drop, 10%. That's nothing to ignore. But again, like we said, Austin had this just gigantic run up, and so there was more room to fall. Months of inventory, 3.7. Again, still a strong number. And then days on market, 61. That's much higher than, say, well, San Antonio is about the same, but Dallas was 41, Houston 45. So Austin has significantly slowed down relative to where it was, and maybe relative to the Dallas, Houston markets.
I think during COVID,
anecdotally, my dad lives in Austin, and when it was hot, he was getting calls, every other day, somebody wanting to buy his house, and he doesn't get those calls anymore. So I think it's definitely slowed down a little bit.
Should have sold it in 2022. But I think Austin was one of those cities that was affected a lot by the migration of the California people. And because it's very much like a to me, it's kind of like a Los Angeles feel, the hipster kind of vibe and everything. So a lot of those people migrated there, and they're not migrating as much now, but they're definitely, I mean, look, 334 in 2019 and 483, even though it's down. I mean, 537 was just a ridiculous number to hit, you know what I mean? But from 334 to 483, I mean, could you imagine if you bought your house in 2019 and you're still sitting at 480? Like in 2022, you probably feel bad because you didn't cash in 2022, but you're still sitting so pretty.
Yeah.
Yeah, I think you're right there. I think that was a COVID rush, because a lot of folks on the West Coast, when COVID hit, they realized you didn't have to work in the office; you could work from home, and you're like, okay, where can we live that's similar-ish, I guess, and way more affordable? And so Austin was the perfect answer for that. So that's why you had this crazy run up. Now things have kind of chilled out a little bit.
Yeah, those are all the people that looked at Houston and we go, man, they got way too many guns and cowboys.
Maybe humidity too. That might have. All right, let's check out this. So this is an interesting slide, and I'm going to briefly just let everybody look at the geography on this, and then we'll go to the next slide. So you can see the rankings, but what's really telling is the next slide, if we can go to that. So if you look here, Houston, 23,000 new construction permits. Dallas, 20,000. Look at the next highest, 14,000 in New York, which has a significantly larger population than Houston. Not even close, really. But no other places are really close to what's being built in Houston and Dallas. And I did not have a chance to see if it's still the case. But I do know that there was a time when there was no other state in the country, including California or Florida, that have more building permits active than the cities of Houston or Dallas, which is really a mind-blowing number. Now, this was maybe 3-4 months ago. I assume, looking at these stats, it's probably still the same. But what that tells you is smart people that build new construction, like the people that do this, are really looking at a lot of complex metrics, advanced forecasts, and they're saying, we're going to build an enormous amount of homes in these two markets. So if you're looking to be a real estate investor, what better place than where the smart money is going all in with their ability to build homes, right?
So true.
Look at little number 7 down there. Austin's, that's a big number relative to a lot of the other cities out there. That's impressive. People are moving to Austin as well, building in Austin.
Relative to the population of Austin, that's a really, really big number. Which is,
that's what I'm saying. Yeah.
1/6, 1/7 of Dallas and Houston as far as population size. So yeah.
Think about Austin versus, say, California, Los Angeles down there. Think about people who live in LA, and that place is enormous. And there's more properties being built in Nashville and Charlotte than there are in Los Angeles.
Nashville is a really good market right now too. We're in the process of moving into market too. And I wasn't expecting that when I look. We just did a deal in actually Memphis, but Nashville is we're going into that next with San Antonio and other markets. But like I was surprised how well Nashville's doing.
All right.
Next slide.
Jeff, you want to cover this one or you want me to roll?
Sure. So this is a list of the 20 most populous metros and showing their gains or losses. So this number includes like natural births versus deaths. So this is everything. This is people moving in, people moving out, people being born, and people dying. And like I was saying a couple slides ago, look at Houston and Dallas. They are number 1 and number 2 by a wide margin. I think what's the next highest? 70. So Atlanta, 78. I mean, that is a massive influx of people. And then conversely, look at the top 3. You know, the big cities that have been the 3 biggest metros really for as long as I can remember being alive. Those numbers are dropping pretty significantly. Those are big numbers. People are leaving San Francisco as well, Detroit. You know, that doesn't surprise me if you're paying attention to the news. But Houston and Dallas are 4 and 5 on the metro size, and they are catching up quickly.
Yeah. Wow.
This next slide is interesting too.
The next one doesn't take into account births and deaths, just people moving.
Yeah. So, you know, AC, you were talking about this earlier, the moves, you know, after COVID, wide variety of reasons, cost of living, other, you know, political things, but possibly, but you look at these numbers and this has nothing to do with how many people are being born. This just has to do with how many people are moving there. And the numbers, it's kind of interesting to see the difference between the numbers, because like in Houston, that number was 124,000. So the delta between moving here and births is like 40,000. So 40,000 births. Then you look at a place like New York, and it's a very old population. So they just moving in and out, they lost 156,000. But whenever you take out the births, it's 222, right?
Wow.
So that city in particular is really, you know, just has an aging population. So at the end of the day, you look at these statistics and it really tells you why the housing market in Texas is really, really strong, and why you can feel comfortable in your values staying steady.
That is definitely an this in Los Angeles and New York.
Yeah, people are fleeing. I mean, that's like I said, the other one, they're still, you know, I was looking it up, it's like, what's our, you know, we net, I think it's a net positive of like 1.6 million people in the country every year, like births versus deaths. So you should be growing as a city, births versus deaths. Detroit, Tampa, and Miami, those are the 3 where there were more deaths than births. And Philly was close. But I think it's very interesting that those bottom 4, you know, St. Louis, I guess, as well, but you throw in Chicago, like it could be more clear where people are leaving.
Yeah.
I went to visit Chicago, and that was the first time being there, but I like to drive. So, I mean, I had a rental car and I drove around the city, and it was like, but I was surprised, even along the river in Chicago, how many of their office buildings are very light. They're not, there's not a lot of people in there. Like it was amazing to me that it was such a big city with and it didn't feel abandoned, but it didn't feel populated. You know what I mean? Like it was a very strange feeling to see such a big city like Chicago like that. You know what I mean? And not like the buildings weren't occupied. Like the office buildings, like I saw the Trump building, I saw the office buildings next to it because I was walking down the river and going along the river, and it was very unpopulated area. Still people there, but not like you would expect. So that
Sure.
makes total sense that they are leaving.
Yeah. Commercial real estate in general is a very interesting category, especially office space. There are people talking about converting some of those into apartments because of the need for a place to live. So many people working from home more often. It's going to be interesting to see what commercial real estate does over the next couple of years, because there's some challenges in Houston, not as much in Dallas, but there's still challenges here in commercial real estate, especially office buildings and even retail. But in these other places, I hear horror stories, like some of the other big cities, San Francisco included. Like I think they've got 40% vacancy in commercial real estate right now, which is just hard to even imagine.
Yeah, it's crazy.
All right.
Next slide.
Yep. This is a slide we've been showing for. Let's go one more. I think Jeff gave a good summary of this. One more. So the housing starts. Another big reason. Now this is national. The numbers are even more shocking if you look at Texas individually. But if you look at this, going back to the 1960s, almost every decade there were more homes than they were built over the last decade, right? And that population of the country was so much smaller then, less than 1/2 in the 60s, and we just had not been building enough homes. There's another reason we think single family investments are so great, is there's just not enough inventory. That's why you see, even when rates have doubled, more than doubled now, in a city like across the country, cities like Houston are not seeing decreases in values, and it's purely because of scarcity, right? There's just not enough homes. That's why there's so much new construction.
Yep. Next slide. We're a little short on time. This is kind of this is pointing out to what Wade was saying. It's like this is a shorter time period, but it shows the builds relative to the population. So that the line going upwards is the population, and you can see it's pretty steady. Builds plummeted in 2007, and they haven't really covered yet.
Yeah. Next slide, very quickly. The rental vacancy rate is still significantly below any time since the 80s. The only time there was lower vacancy is whenever rates across the country were 12 to 18%, which pushed people into the rental market. So as rates increase, if you're a real estate investor that's doing buy and hold, it pushes people into the rental market, and we just had another rate increase here recently, and it looks like that trend may not stop anytime soon. So if you are a real estate investor, there's another trend that's real positive for you. You always want to look at how people respond historically to macroeconomic impacts, right? Whenever rates go up, what do people do? And you can see the lowest vacancy rates were when the rates were the highest. So another reason, great time to be in a landlord or owning long-term rentals. I say we jump to this last slide, the affordability index, and we go to a few questions. Jeff, you want to cover this, and then we'll see AC's opinion, then we'll open it up to questions.
Yep. So we've been covering this since we started. It's basically a list of 100 markets, and it shows affordability when measured. You have income relative to mortgage payment. So it's a measure of how much of your income do you have to spend on your mortgage payment to live in a certain city based on averages. So as you can see, Miami is the most expensive right now, followed by LA, Newark, New York, Hialeah. I'm not sure I'm assuming that's some piece of Miami, a suburb of some kind. I'm not sure where that one is, but Austin right up there at 20. That's where it was last year. It's 4 years ago it was 24, so it's pretty consistent. Dallas 23, last year 33, so it's becoming a little bit less affordable on this chart. And then Houston 38th, last year's 29th. Before that 23rd. So Houston's actually becoming a little more affordable, when you take these factors into account. So it's kind of, like I said, it talks to the fact that Houston, what was Dallas, 4 and 5 on that chart we saw previously? They were the largest metros. They were, is that right? 4th and 5th.
Yeah.
And 4th and 5th. And they are the 20th and 38th most affordable. I'm sorry, 23rd and 38th most affordable, Dallas and Houston. So still, relatively speaking, very affordable places to live.
I think this dictates exactly, what investors already know, which maybe the layman doesn't know, like the person that's just buying a house. But if you're getting into investing, I mean, you're obviously not wanting to buy in Miami to invest. And some of those lower areas, you know, you might be affected and not want to invest just because of the, you know, job issues or something like that. But that whole little yellow section there, like that, those are great places to invest because you still have, you know, they're not spending all their money on rent. You know what I mean? Like by the time you get to Los Angeles status and Miami status, like I mean, you're struggling to live. You know, I mean, like we still have some room here, and you can be comfortable in Houston, Dallas, Austin, and those other areas right there. And I think that dictates perfectly why those are great areas to invest. I mean, it just tells you straight up.
All right, Derek, I believe that is it. So if somebody wants to reach out to AC and his group, do we have any questions, Derek, or are we done?
We do. We have some questions. I was wondering if that last one is that related to Messi getting signed by the Miami Soccer Club. Is that why they were? I don't know. Maybe. A couple of questions. I'm new to real estate investing. Where would I get started in the Dallas area? Where would you suggest in Dallas?
As we mentioned earlier, the interior is pretty expensive. We see most of our investors grabbing things up, especially north of Dallas, but anywhere on the outskirts. But we see a lot of people really being aggressive towards that Texas-Oklahoma border. There's still some very discounted properties, very reasonably priced, where people can still commute and get to fantastic jobs. A lot of the best jobs, a lot of the corporate jobs are on that north side of Dallas. It's where they have a lot of their corporate headquarters, and people can really commute to that, even in Oklahoma, southern Oklahoma. Sometimes people will drive in. Believe it or not, that's a long commute, but not longer than a lot of people in Houston have. So I think we can relate to it. But that's what I would say. Focus on the outskirts.
Yeah, I mean, just to kind of follow up on that, like, so now I'm starting to have students all over the country. So what I tell them to do is that I use a website called city-data.com. I don't know if you've ever heard of it, but you can go on there and, like, say you go in the Dallas area, it'll list all the Dallas or most of the Dallas zip codes. And you can research zip code by zip code. So like for Houston, for example, our working class neighborhoods, I consider that $250,000 and below. Now it's a couple years back. I think it's at 2021, the data, but you get an idea of where it's at. So I think working class is 250 and below in Houston, but you kind of figure out what working class is in your area, but it goes nationwide, that website, and you can kind of get an idea of and look for working class neighborhoods, and that's where I would suggest starting to look for investments, either wholesaling or buy and hold or even flipping.
That's a great point. And to your point, AC, whenever you flip properties that you have multiple exit strategies, you just greatly reduce your risk. You're not going to hit as many home runs sometimes, but boy, if you can put it into a DSCR loan, or if you can refinance it into a conventional loan, if things go badly, man, you're in a much better spot.
Exactly. Yes. And you're in a better position to be able to have those exit strategies in those working class neighborhoods. And yeah, you don't want to be doing that in that Miami area.
No, that's not going to be a cash flowing property. No.
Question number 2, where can I get more information on DSCR no income doc loans?
Well, we have loan offers at the ready, sir. I mean, if you go to our website, or our information is down there at Catalyst FTG, call us, fill out a form saying to contact us. Somebody will be willing and eager to help explain the products and go from there.
And also, Wade has compiled a blog recently on debt service coverage ratio loans, so definitely check out the Catalyst website and our blog on DSCR. That's a good place too.
And we also have a either do or will shortly. I can't remember, Derek. Have we been able to post that presentation we did on DSCR loans, or will we be doing that shortly?
This Friday. We go live this Friday. Mm-hmm.
Excellent. So there'll be a really good 1 hour, maybe I think an hour and a half training actually on DSCR loans that anybody can come by and watch. So definitely do that as well.
Yes.
All right.
And
well, AC, as always, really appreciate it, buddy. Can't thank you enough for popping by and dropping such great knowledge on us. Derek, do we have anything to wrap up with?
Final thing is we always have one lucky winner. You have to be listening live to win a half off your first hard money processing fee. And this month's winner on the July real estate market update is David Armstrong.
Congrats, David.
Good job, David.
All right, everybody. Well, we really appreciate it and look forward to seeing you next month and maybe at AC's event or other events across Texas. So everyone have a great day.
Thank you guys for having me on. I appreciate it.
Thanks, AC.
Bye, everybody.
All right, see you guys.